As Confucius once said, life is really simple, but we insist on making it complicated. It looks like the Federal Reserve should take this advice and keep things simple when it comes to the economy. Janet Yellen, arguably the biggest rock star in the history of our economy, met with some bank CEOs today. She came out of the meeting and said, get ready for more bank mergers. That's about the nicest possible way of saying get ready for more bank failures. When it comes to artificial intelligence and your job, watch out. And in real estate, we're definitely in a buyer's market right now. Historically low inventory, yet prices are budging, but not hard enough to meet affordability. I wonder why that is. Welcome back to This Week in Mortgage, everybody. My name is Sam Battaglia at Mortgage Black in Beverly Hills. I hope you had a great week. All right, Federal Reserve, they had a conference this morning on exercise and academia, and I had a tough time. I consider myself somewhat schooled in these topics. I actually couldn't follow the Federal Reserve Chairman's logic as he kept talking. Something else I couldn't follow is why he had a bunch of papers in his pocket, like I do now, when they were just having a conversation. I didn't like his body language. I couldn't follow what he was saying. And on top of that, I didn't like how he kept shuffling his papers after he made a statement, almost reading them to say if he said the right thing. His body language was terrible today, did not show a lot of confidence in what he was saying, and I don't think I was able to follow what he was saying because I actually don't think he was able to follow at certain times what he said. Proof is in the pudding. Watch that conference. Watch his reaction after he made a statement. He went and looked at his papers again. This is a simple observation from me, but a body language expert will definitely lead into some more information on what happened at the Federal Reserve Conference today. There was a statement made by the chairman, and I quote, "Monetary policy and supervision tools are separate." I have one reaction. No, they aren't. That's like saying when you're making a salad that the cucumbers, the onions, and the tomatoes are going to be digested separately, yet they're the same thing, yet separate. I'm having a tough time deciphering this, but monetary policy is I guess fixed or driven by the amount of supervision tools the Federal Reserve has. I don't think they're separate. I don't think this was a wise statement by the chairman. I'd like some more depth on that statement right there. And again, his body language did not exude confidence. Shuffling around with papers after making a statement actually scares me. And I do know this, as I've said before, the Federal Reserve is using an old playbook for a new game. Time to get with it, folks. Moving on to Janet Yellen, arguably the biggest economic superstar in the history of our country. She has been the head of everything for that matter. She's the only person to hit the trifecta that she's hit. So she had a meeting with bank CEOs today, and she came out with a statement that said, expect more bank mergers. Well, that's about as nice a possible way as you can say, expect more bank failures. As I have been mentioning, a shoe is going to drop on some bank's head, and she confirmed that this morning. It's a matter of who and when at this point. Quick question I have for everybody. Where are the regulators? What happened to the stress tests? What happened to the bank oversight? Quick question. Wouldn't part of the stress test you do on the banks would be to game it out if we had to raise 500 basis points in the better part of 14 months? I don't think the stress tests are working. I don't think the bank oversight is working. I don't know how, because if we had any more regulations in banking, we'd be almost unregulated because we'd be so regulated. Think about that for a minute. Quick note on the debt ceiling. This is going to become a very big topic in the next 10 days. As we've all been going through a impromptu civics lesson for the last 8 years, unfortunately, the talks today in Washington broke down again. Well, for the second time in the last couple months, I guess, but now we're a little bit closer to the 11th hour. The debt ceiling, talks broke down. My guess is we won't default on our debt because I'm thinking we're all going to learn the civics lesson of what the 14th Amendment is, and if President Biden actually has the opportunity on his own to go at it and raise the debt ceiling so we don't default, because if we default, we have no idea what's going to happen because that is uncharted waters. So get ready for a historic civics lesson possibly coming up if everybody in Washington cannot play nice in the sandbox. Moving on to AI. I've mentioned this before. Jack Welch, some see him as the greatest CEO of all time. He wrote the book that says to fire the bottom 10% of your workforce that so many companies live by. He said this a long time ago. If your job does not contain emotion, consider it obsolete. The man was ahead of his time. Seems like artificial intelligence is now after everybody's job. Artificial intelligence, the speed of development is unlike anything the world has ever seen. Let me say it again. The speed of development is unlike anything the world has ever seen. I'm not joking. I'm not exaggerating. I do this show once a week. Every single week when I go read on things to tell you all about, artificial intelligence is moving at an unprecedented breakneck speed. We don't even know where it's going to be next week. Forget about next month, and certainly forget about next year. But I can tell you this. 100 years ago, technology changed the world. It started getting rid of manual labor, where you could replace manual laborers with machines that were not intelligent. They were just mechanical, and they got the job done. Well, fast forward to today, we are losing mindful labor jobs. Not like before, manual labor, mindful labor jobs. What's an example of a mindful labor job? My job is a mindful labor job. There's plenty of jobs out there that do not contain emotion to some degree that can be done by a machine that can be programmed. So now, 100 years ago, the machines came for manual labor jobs. Now, artificial intelligence is coming for mindful labor jobs. Get ready, everybody. And if you're looking for a new career, if you're coming out of school, I would have to guess that an AI programmer may be the most sought-after job on the planet right now, regardless of your industry. And here's my advice that I'm actually going to take about AI. Work with it, not against it. I believe that has to go for all of us at this point. Moving on to the real estate market, very ho-hum, kind of slow. It is indeed, as I mentioned months ago, it has shifted to a buyer's market. Here's the funny thing. This is a weird time. Traditionally low inventory, elevated prices, lack of affordability, but it's a buyer's market. All of those things do not gel. But I can tell you this. Go and look at the $3 to $5 million houses that aren't selling and are sitting on the market, and as we mentioned last week, being delisted. You tell those people there's a lack of inventory, they're going to say, why hasn't my house sold? And guess what? I don't have an answer for you. And like I've been mentioning, low inventory, given all that's gone on, is the absolute saving grace in real estate right now. Okay, everybody, that is my show for this week. I hope you enjoyed it as always. Thank you for your time. It's Friday again here in LA. As the Beatles would say, here comes the sun. Let's hope that's the case. Please be a kind person. Take care of your neighbor. Take care of everybody. Do unto others. And just remember, what goes around definitely comes around. Okay, everybody. Thank you for watching. Have a great weekend.